Markets correspondent right away to help set up the action today. All right, KG, I'm curious to know if you think that oil will continue to set the tone for markets today. Your thought?
Yeah, I believe so. Obviously, we also have the options expiration. That'll be a big thing. We do not have any big headlines when it comes to the economic data. And I think the potential risk over the weekend when it comes to not only oil infrastructure, but also natural gas infrastructure will still be in focus at the moment. Now, if we look at the last 2 Fridays, Diane, we have seen open interest actually increasing for oil contracts across the board. And that actually then coincided with prices moving higher. Let's see if that's going to be the same type of action that we see today. And in fact, around, let's say, 2 o'clock Eastern time, 2:30 Eastern time is usually when we start seeing the open outcry actually close, and that's where we could probably see, that last hour or so, oil actually moving here fairly aggressively, either to the upside or downside. But there's still some perceived risk, and you're also seeing a situation where there's a strong correlation. There always has been, but it's even stronger now, where oil and the dollar actually move pretty much in tandem. So as oil goes up, the dollar's been going up, and as oil goes down, the dollar goes down, and there is an inverse relationship with the equity market. So I still think it's going to be a very big headline. I think there's probably still some geopolitical risk, obviously, over the weekend here. And we have, as you kind of talked about, some of those measures regarding unsanctioning the oil from Iran and having those barrels that are on floating storage, if you will, or basically oil on water, starting to hit the ports over the next week and a half or so to alleviate some of the pressures. But once again, that'll be a short-term fix here. So I do think that the oil market is definitely going to determine the tone today.
So how much does that matter, the potential, rolling back of sanctions? I mean, is that why crude, although we're taking a step back right now, remains somewhat elevated?
Yeah, I mean, that's going to be the big question. You're going to see a lot of different estimates there when it comes to the impact. Now, if you're looking at Kepler, they're estimating around 170 million barrels. That's currently on water, so we call that floating storage, also including cargoes in transit that might already be accounted for. If you're looking at some other sources, you're looking at around maybe 26 million to 30 million barrels that are actually available for to go to ports at this point in time from Iranian crude. So there's a big disparity there. If it's that 30 million barrel level, you're talking about maybe 3.5 days worth of coverage that we're seeing losses on a daily basis right now. If it's closer to that 170 million, which I think would be a lofty goal, you're looking at better coverage overall. But once again, a little bit more of a short-term solution if we continue to see strikes on refining capacity as well as storage that's on land. If we continue to see those getting hit as well, that's just going to really kind of eat into maybe some of these short-term benefits from the removal of these sanctions.
Okay, and then with triple witching happening today, tell us a little bit more about how much volatility to expect.
Well, we are expecting a significant amount of volume on the options front. So for triple witching, what you're looking at is the futures indexes. So if you're looking at the E-mini S&P 500, the NASDAQ 100, as well as the Russell, those contracts will actually stop trading at the equity open. The options or the quarterly options will also expire at the equity open. And then you also have the equity options that are quarterly going to expire at the equity close here. So expecting a lot of volume for today that could create significant volatility. It also can create these interesting dynamics in the market where you either have maybe an aggressive sell-off to start the day, and then the last hour and a half, you start seeing the market really bid up, or you can have the opposite reaction as well. So obviously looking at some of those impacts, and if you're kind of looking at the open interest right now, I'll get this up for you. The open interest where you're really kind of focusing on right now, the pen risk is going to be 6,600 for the S&P 500. That's where we have the significant amount of open interest and gamma exposure right now, which is sitting at around $12 billion in exposure for every point for the S&P.
Which has been an underperformer for UPS. I was very surprised as well. And you're seeing a bunch of analysts on the sell side raise their price targets on FedEx off the back of this. Let's get into the levels that you're watching out for today, KG.
Breaking below that key level and breaking below 6,500, unfortunately, then you're starting to talk about the 6,000 level moving forward. That's not something for today, but that's something over time that we could look at. And usually, volatility actually improves after this options expiration. So that's actually a seasonal tailwind for the bulls, even though we do have some headwinds when it comes to the macroeconomic environment as well as geopolitical risk.